Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good As Gold. So, gold has basically been stuck in the same old sideways trend we've been seeing since early March. And if we take a look at the gold against US dollar daily chart, we can see that last Thursday it did manage to poke its head above the 2,200 US dollar mark, hitting a fresh all-time high at 22.23 US dollar per ounce. But then it kind of took a breather, ending the week up just 0.4%. This week the bulls are hanging around, but they're not exactly setting the world on fire, with prices sort of hovering around the 2180 US dollar mark at the moment. Aside from that recent record high, gold has pretty much been bouncing around between 2146 and 2200 US dollar for the past months. So if the bulls want to keep the party going, they'll need to defend that upper boundary of the consolidation zone around 2200 US dollar, which is also a pretty big psychological level. Breaking through could pave the way for another shot at that 22.23 US dollar high. But if things go south, we might find some support near that lower boundary around 21.46 dollar. And if it keeps dropping, we might see some buyers sniffing around near the previous high of around 20.88 US dollar back in December. So the market's been flip-flopping between bearish and bullish sentiment. So what's been really driving all this action lately? Well, even though we've been seeing a bit of a resurgence in inflation with the latest CPI and PPI numbers, the Fed's not exactly hitting the panic button just yet, and they are still keeping that median forecast for 3 rate cuts this year. And Fed Chair Powell also made a point at the press conference of saying that unexpected increases in the unemployment may prompt the Fed to cut rates. So basically, it seems like the Fed's cool with letting inflation hang around for a bit longer to keep the job market from going off the rails and avoid any nasty recessions. And the dovish tones from the Fed has been pushing US Treasury yields lower, especially with the 10-year yield down to around 4.23%, which has been giving gold prices a bit of a boost, like when they briefly shot up to 23 US dollar last Thursday. While at the same time, some traders are thinking that the reason the Fed's been holding off on rate cuts is to avoid any debt or I would say financial crisis, especially after the Treasury had to rustle up 2.4 trillion US dollar last year to cover the deficit. And with the US election getting closer on November, no matter who wins, government spending is going to keep climbing. So that's got folks thinking about loading up on gold in their portfolios just in case we see a repeat of the 2019 debt debacle. Plus, with the tensions heating up between Russia and Ukraine and the terrorist attack happening at the concert hall in Moscow, folks are once again looking for safe havens, which have been prompting gold prices up. But obviously, not everyone's so into gold. The latest numbers on the US dollar goods orders for February showed a 1.4% increase, beating expectations by 0.4 percentage points. That's given the US dollar a lift, which is putting some pressures on gold prices. So overall, gold's been trading in a pretty tight range since hit that new all-time high last Thursday, even though the bounce in the US dollar goods orders has put a little dent in gold prices for now. The fast dovish pivot and escalating geopolitical tensions are still giving gold some solid support. For the remainder of this week, keep an eye out for the US PCE inflation data dropping on Friday. That could be a real game changer. The market is expecting the core PCE to hold steady at 2.8%. If PCE data comes in hot like CPI and PPI, it might reignite worries about inflation heating up in the coming months, putting the brakes on the rate cut expectations again, thus causing a short-term dip in the gold prices. And don't forget to tune in for speeches from the Fed Governor Waller on Thursday and the Fed Chair Powell on Saturday. If the Fed sticks to its dovish bounce, it could give gold prices another lift. And lastly, with the Easter coming up this Friday and the end of quarter just around the corner, the volatility could rise in the market. So that's pretty much for this week. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!